So we are talking about today radar in particular, and this is going to be a very concentrated discussion of what we call market profile at TriggerCharts. And basically what we're talking about is the whole idea of finding a very good point of entry or exit for that matter, looking at targets, etc. We're going to take you through a couple things we're going to talk about today that I think will be important. All right. So the first thing we're going to talk about is the idea of defining risk and reward. We're going to talk about, where is that optimal entry point? What is the design of a market profile that would indicate that there's going to be a good entry point or an exit point, or if there's going to be a short entry, if it's trending in a particular way? What are the shapes and patterns that you want to look at when we're talking about the market profile, or what we call radar? And one of the reasons why we decided to name it radar, by the way, was because really what we do is we see through. We can actually see where the volume is being played at. And we've done some other algorithms like the altimeter to come up with a little bit more further refinement of that. But importantly, and I think it's very important to recognize that the backdrop and the backbone of all the things we do with altimeter and autopilot are based on the actual radar, which is a traditional, with a slight slant to it, traditional market profile, which is volume at price. So we want to find out where the concentration is of volume, because at the end of the day, we know that price is really all that matters, but more than that, we want to see where there is that concentration, where people are having their conviction and commitment to a particular price, where they're buying, where the line in the sand is. We're going to talk about multiple time frame confirmations, some probability skewing into your favor, and we'll even try to talk about some of the settings that go along with this. Now, when we talk about defining risk and reward, let's kind of get something straight here. This is very important. This should be part of you every day. So we're going to look for support, resistance, and holes, and I'm going to give you some examples of that in a moment. But we're going to look for these kinds of things inside of a radar. And again, without the altimeter, without the autopilot on, we're going to specifically focus in on the radar. And we're going to look for how we actually find where those points are. And actually, to be very honest with you, we use the altimeter a lot in trading. And really, when you look at that and autopilot, if you take that off and you look at the radar, you can find a lot more refined detail inside of the radar. We're going to talk about looking left. We always want to look left when using any of these indicators. What was the positioning before? What was the confirming level today? But what happens to the left in 1, 2, 3 radars back over time? And again, we're going to talk about using multiple time frames for increased probability. And that basically means that we're going to do something like, hey, you know what? The 240 minute looks like there's a breakout happening here. But what is the longer term time frame telling us? What happens on the daily, maybe even the weekly? And I think the other important thing that we need to put down as the definition in defining risk is the idea that you never risk more than the potential reward. So, for example, you want to make sure there's a multiplier effect on the risk. So maybe you can risk 2, 3, 4%, 5% to make 10%. Hey, that's great. But if you risk 15% to make 3%, that doesn't make sense. This doesn't make any sense at all. And whatever the numbers that you look at here, whether it is risking 1% to make 4%, or you're risking 5% to make 10%, hey, that's great. But always try to have a multiple factor of where your reward is on any time frame, whether it's in percentages or maybe even in dollars and cents, to make sure that you have the right risk characteristics. So let's take a look at some important characteristics of patterns. So when we look at the top, and we look at this level, let's kind of zoom in here and look right into the top here. And we can see that when we look at this particular level, and I'm going to use a little bit of a drawing highlighter here. So we're finding consolidation, meaning we have an equal distribution, right? So we look at this particular pattern here. We see that the bulk of the volume, the bulk of the radar is inside a particular consolidation area. Very little on the outside. So we see 2 radars back, and this is a daily view. We look at 2 radars back, and we see there's consolidation. You have this big block, right? All this here, all this is all this is all volume and price is a consolidation pattern when we look at this, okay? Now, Let's clear that off here. And when you take a look at that, we want to look at, in a consolidation pattern, what do you want to do? Well, when you see a consolidation, there's no breakout, so you're going to do something like buy the dips, sell the rips. Now, these days, it's been buy the dips, buy the dips, buy the rips, buy the dip. It doesn't matter. Everything's been buy, buy, buy. There's been no, in the last 2 months, there's really been no great shortable opportunities for major markets. But when you look at a consolidation pattern, again, consolidation pattern, where you see it's just this broad range, long time of just staying within this range that's pretty tight. This is a $3 range here, right, from 187 down to 184, right here. So when you see that, what you want to do is you want to look at buying dips on support, and you want to sell the rips or short or sell on the resistance. That's the game. That's the game plan. Now, going a little bit further here, when we have a trending situation, when we're looking at our bottom chart right here, and we're looking at the, let's see, the trend here. Okay, so we're looking at this particular one is a much different look. Now, no longer do we have a consolidation. What you have is a big block, very wide, from 188 up to 195 on the S&P. You have a big load of support, right? A lot of volume, a lot of price volume down at the bottom here. And then you have very little till you get towards the top. So you have this much different look. This is a trending pattern. Now, we're looking again at radar. Focus in on the radar. That's the important feature here. That is a much different look than we saw a moment ago. Okay? So a moment ago we saw that there was this good consolidation over time, and now we have a break. So there's an upside bias on this one. What we're going to do is we're going to look to buy the dips down to support, and there's the altimeter in here. But you're going to buy the dips on support, and you can see where the radar was also a very heavy level to the left here. Very basic concepts we're talking about here, nothing major. But again, consolidation versus trending. That's the two things you want to look at there. Oh, let's go back again. Skipped too far. Went a little too far ahead of myself. Sorry about that. Okay. Now let's look at a different one. We're looking at multiple time frame confirmations. Okay, so we're going to look at what does it show us here when we are seeing this kind of scenario. So what we have is on the top, we have the daily. On the bottom, we have weekly. This is on 5/12/2014. When we look at this and we want to find, okay, give me a confirmation level. So again, we're going to look at this first one, and we see that we did notice that there was a level of, when we look at the top here, we saw that there was a level of, let's see if I can get this going here. Oops, cancel that. Uh-oh. Let me get rid of the zoom. And for some reason, you see that in the middle of my screen there? Let's go, I have an idea. Okay, hopefully you can see my screen coming back up here. All right, there we go. That was a little bit crazy. Sorry about that, folks. Technology. When we look at the top area here, what we see is that there is this level of, move this over a little bit. Get a set. Okay, you said the same consolidation that we saw before, but now what we want to do is we want to focus in on the weekly. You can see that the line on the weekly, about 187.5 that we're showing here, okay, this level about 187.5 to 188 on a weekly basis, we're seeing that there's nothing above on the radar. There's just nothing going on here. The same thing is about the same price here, and when you broke outside of that consolidation that we saw, this area that I will mark in for you, this area, and then above the consolidation, you can see that, just a little consolidation area there. You'll see that there was this break, and it was confirmed by both the daily and the weekly. Okay, so let's kind of get into some real discussion here, get rid of some of our highlights here. All right, let's take a look at some live charts and some things that we can take a look at for managing all this. And there's going to be, I want your attention here because we're going to have a little bit of a quiz going on. All right, let's kind of look at this. All right, so you should be able to see a screen in front of you right now. And we're going to focus in on S fun to begin with. I'm going to open up this chart a little bit here each time so we can see what's going on a little bit better, and make it nice and big so we can see what's going on. Okay, this is the daily. Actually, we'll go like this because I want to kind of, and okay, so in front of you is the daily. And what we have here is something called a hole. I want you to take a look at this. You see on this particular chart, just with radar, you'll notice that between the area that I'm pointing out, or the box, if you will, that there is very little volume at price. What does that mean? Well, basically, you can see that the lines on the radar are colored purple and blue. So you're going to go from the top of a swing pattern in the greens down. You're going to see purple. You're going to see red, magenta. You're going to see yellow. Essentially, when we're looking at this, the main thing is to look at your colors. And what you're finding is when you have a blue and a little bit of purple, very little volume. Very little volume at those prices. And that's important to look at because that's when things move fast. So we have slow or consolidating, and we have fast and trending. When you have a time where you see consolidation, for example, look at to the left here, and we see there was this consolidation. And basically, when we look at this, we can see that there was a level of movement right through here. There's a big block of red and then the yellow. And it moved, and then when it broke outside of the radar thick parts, if you will, or the level of area which was the consolidation zone, you saw that moved very quickly, the price. Look how quickly it moved, from about 14 down to about 11. Now, it did move quickly between here also until it kind of got its holding and support levels. But when we get to the right here, you'll notice that as soon as we get beyond this yellow, which is the most heavily traded volume across the entire radar that we have set up here, somebody wants me to point to the radars. The radars are these blocks of color. Can you see that? Let me do something for you. Let me see if I can do this here. Let's format the symbol, and let's put the style, and we're going to make the price data invisible. Those are all radars. See that? Can you all see that? The starting point of a radar is right where it starts. It's basically an algorithm that we developed for the swing of a new trade. When you see a swing occur inside of a price move. So there are also settings, which we could talk about for a second, inside of the radar. So we have number of bars that we're using is 30. Density is the thickness of the radar. You can make that thicker if you want. Depends on how you want to see it and how many actual lines that will be drawn. And 10 is the total number of radars that you have on your particular chart. So this is 10 radars back. We're using 30 bars. These are standard settings right here. 30, 50, 10. That's all you have to set up with radar. That's it. 30, 50, 10. Now I can give you an example of what this will look like. Let's say if I change this to a 10. Okay. That's what it looks like. Much more compressed. Not as much time. I want to have some time. I want to have a period that I can count on that has enough time involved that I can see what's going on with the players and where the volume at price is. This gives me an idea, but I don't particularly like this from all the testing we've done. That's why we use the setting of 30, 50, 10. So I'll bring this back. Yeah, you can play around with these, but essentially, look how much wider those are, and it gives you much more depth in terms of the total radar. Let's put our pricing back on here for a second. Format the symbol, and we can put the take off the price data invisible, and there's our pricing. So now we see a hole here. We call a hole. Always look for a hole. That's first of all, okay? Now let's look at another stock. And let's erase all of our drawings. This is Solar City. Now I'm going to actually make this a little bit smaller so we can talk about two things at once here on the bottom, okay? You can all see the bottom, I'm sure. Solar City's up another 4% today after it just rocketed yesterday. And let's take a look at this. This is important, and a few things to notice here. First of all, on the right-hand side, I want you to focus in on something here. This is the weekly, but you can do this on any particular time frame. There is a pattern that we look at here, It's not a perfect pattern here. The daily has the same exact pattern also. It's called a B, a small b. Look at the shape of the B. See that B? Okay. Essentially, when we look at this pattern, let me change our pen color to something pretty bright here, and let's take a look. We have a B. See that? Okay. We have a B here too. Nothing, a stick, and then a B. Different than this, which is just a blob. That's not a technical word. That's just what it is. This is a normal distribution. We have an equal amount above and below, and the thick part is right in the center. That's what we call a normal distribution. Now, of course, this is being recorded, so you can look at all this at any given time in the future. But when we look at this, and you'll notice this B pattern that we're talking about here, we're looking at this particular radar. Okay, right here. Again, I'll overlay this. This is the B. There's normal distributions, there's B's, there's kind of holes, and then on top of that you have P's. But I wanted to show you this, and we'll go through this now to show what are the potential things to look at, and then how we're going to deal with this. You know, what do you do with this, right? After we find out this information. Let's look at triple D for a second. There's a fast and loose. Now, I want you to focus in on this here. Let's kind of bring this up here. Just one second, I'll bring it, and I'm going to make it bigger. Take a look at this particular distribution here. You see how the lines in the radar itself, you look at the actual levels, they're very wide. Very wide. See that wide? 1, 2, 3, but they're wide. There's a distance between the radars themselves. And the entire radar goes from 95 to 53. That is some serious price action going on there. Okay? Versus, look how thin and how close together they are on this particular radar. Okay? What you're seeing is a fast and loose price action, which will have very significant amounts of volatility inside of it. And when you see that, that's something that you can, in fact, play both on the long and short side. It doesn't matter. You can choose whichever way it's going to actually move and to your particular flavor and how you trade, whether you're going to go short or long. Depends on where you're going to play. But bottom line is that this is a fast and loose. Now, again, we'll get to some of this a little bit in a moment, what you want to do with this. But I want to show you this fast and loose. On the right-hand side, what we're finding here is there are two patterns again. So the first pattern that we see, got a B. All of the volume, all of the price action is at the bottom of the profile, of the radar. And here, we have more price action at the bottom, but just a little bit right here, right? It's kind of like it's somewhat strange, but yet if you look at it, it makes sense in terms of price. But again, what I want you to look at here, what's important, and we're looking at multiple price confirmations, is that you have a significant amount of overall consolidation. If you just draw a box around that, you'll see that. Look how wide and how great that is. And what does that show us? That shows us that when it broke above those levels, clearly there was an opportunity for it to move higher. But more importantly, when this came down, and I'm talking about the right side here, now we're all the way over here to the right side of this. When this came down, and this particular stock started to base out along the bottom of the most highest level of volume in both the current and the previous radar, this is a time that you could say that it may be worth a shot looking at a bounce for a long entry. Okay? That's what this is showing us. Now, it's tried a few times to bounce from there, and it hasn't really done well, but the real play is going to be if you look left, and we always want to look left, look at this radar. We see that really from the level of about 54-ish, 54 and a half, up to about 80, there's been no volume. There was a gigantic move. Look at this. Boom, 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 boom. This big move. Now, if in fact we notice at the same time that on the current radar that we have the same kind of pattern with limited upside resistance, if you can actually peg over this level, and we'll get the exact level here, we'll call it 56. If you get above 56, what happens here is that you're going to see the opportunity for this to actually jet higher dramatically. There's nothing, when you look left, that's really going to be significant amount of resistance. A little bit here, but you get clearly over 60, you have the opportunity to move right back up to the highest point of volume. Your target is about approximately 78. So you would wait for that. You can play the bounce if you want, start pushing money in a little bit, but if it gets to a point above the break, that's when you want to be in a full position. Okay, that's buying the dips, buying the bases. Now Apple, take a look at what's going on with Apple. We have another B pattern. You see that? See that you have another B pattern? You can all recognize that now, a B on the weekly on the right-hand side here. Right on the right-hand side, you see this pattern. That's a B. So you have a lot of support. B is support. A lot of support on the base. A lot of overall potential for buying a dip, or if it breaks out, if there's nothing left. I mean, look at this. Look at what we're showing you here, right? If you take a look, there is nothing really stopping Apple in that entire range. There's just nothing to the left. All right, moving along. Now I'm going to ask you a few questions here. This is Outerwall. This thing is getting hammered today. This is the old Redbox, or the Redbox company. So we have a couple of things going on here. So first, notice that we have a P. You see that? Can you see what's going on here? I'll move it, and then do a bit of a drawing on this. You have, instead of the B, you have a P. See that? That is a P. Again, a normal distribution, it's not. This is where there's a lack of any support below that level. When you look at this, you have to say, okay, if it drops below there, man, this could gap down, or on a reversal, it can move very quickly. So let's take a look at that. So when you're looking at this, you see that, okay, well, this big gap dropped down, and there was some support here, and you look left, there was definitely a big area of support on the previous radar. But when it started moving back up, look how quickly it moved right back up, because there's no resistance in this area at all. I got a lot drawing on here, but that's because on the P, there was no participation going on this. Now we look to the right. Let's look at our right chart here. This is a normal distribution, right? Remember I told you have a normal distribution? Could be a D if you want. That's a normal distribution. You have equal amount on top and bottom. Now, at the same time, though, even though this is a normal distribution, realize something. It is wide. You're going from 45 all the way up to about 70. 71 down to about 45, 46 and change. There's your baseline. This is, again, on a weekly, but you can do this on any particular time frame. It doesn't matter. It really doesn't matter what time frame you use, okay? Now, I want you to focus on something here. This is down 6.5%. There was a downgrade to here, but look at this. This is a fat. Look at how fat this consolidation is, right? Fat consolidation. Definitely consolidation, because compared to the last where there was a normal distribution over here, what you're seeing now is that there was this level of overall consolidation within a range, a little bit fat, okay, 61 to 69. It's fat because it's really concentrated in the center. You saw that the stock just kind of meandered. But when it broke, here's the clue. Here's the thing you need to look at. When it broke, you notice that there was really a bit of support here at this line. But you look at the bottom, when it broke, it really has the opportunity to move down into its hole, a little hole right here. And there's your first target of support. You break down below that, again, on a weekly basis. This is a longer term situation here. But when you look back and you see that there really is, in terms of line in the sand, let's kind of look at this in a different way. You really have some support at that level, right? About 56 and change. But you break down below that level, and what are we talking about? We say, well, it could meander a bit, but really your next target is going to be the center of that, this particular level of the radar, a couple back. That's why we always look left. And your final level of support is both the bottom of the distribution from one radar ago and 45, which is the highest level of volume from 2 radars back. That's how you want to look at this. Always look back. All right. Now let's go on. Okay, so I'm going to ask your opinions here. We're looking particularly at, let me kind of highlight this so you all know, we're looking at this particular, right there. We're looking at that radar. I'll make it a little bit bigger for you. And I want you to tell me, and write in the chat here, what is the, I'm going to move this over a little bit here. What is the shape of this? What is the overriding shape of that particular radar? Yep. Okay, anybody else? What shape are we talking about on that particular radar? Yep, James, you got that? Gary? Martin? I'm just picking a few names here, picking on you. Diane? What shape do you have on that particular radar? Right? Yep, everybody? Yep. A bunch of people writing in. Yes, you have a B. Correct. So you have a B shape here, and I'll highlight this for you. And let me highlight this for you. Essentially, you have this going on. It's a really long B. And what that means is when you have that really elongated area of the B, what it tells you is there's a lot of support at that level. A lot of support at that level. So now what is our target on this? Give me an approximately. What is our approximate target on this particular move if it moves higher? Let's say that first. What is the approximate target if it moves higher? Yeah, I would say if you looked at this, and let's kind of look at it this way. Let's say that we know that if we look backwards a couple, right, just from what's on our screen right now, we can say that approximately, what is it, 19, a little over 19 and change is a target, because we see the yellow, which is our most highly populated, the densest area of volume at price, both times backwards, okay, it's also the top of this particular radar. You could probably say that, okay, well, at the same time, you know, this is going to, you know, probably look at, I would say about, right about here, about 1750 is another target, because you look back, there's another volume at price that is very, very strong, and it's the start of some more possible resistance at this level. Okay? So that's what you really want to look at here, and you want to really say, okay, that's the, you know, the if-then. Now, if it goes above the box, that whole radar, you got some level of intermediate problems there. But also, let's look one thing further. Let's look at a multiple time frame. Let's go over to the right and look at the weekly, and we can see on the weekly, if it does, there's a bit of a hole here, and we could say that, oh, well, about, let's see here, what number is that? 1750, once again, is the level. It just coincides to the left-hand side, 1750. On the weekly, it's 1750, and if it does go above that, probably somewhere in the neighborhood of, I would say, about 1876 or so. Above that is free sailing. Above that, there's really nothing. This is a gigantic B on this side. There's nothing below it here, and there's nothing above it here. So you can see a real rip to the upside if it moves. So if it moves above here, you still have, you know, there's really no target here. You'd have to go back even further. But probably, oops, that wasn't very straight. Sorry. Right about the 22 level. If. A lot of questions of if, right? If then. Okay, let's go on to another one here. Okay, let's look at the right side here. Let's look at the weekly now, and tell me something. Let me kind of bring this a little bit differently. There's only 3 radars on here, but what's the radar trend? What's the trend of the radar here? Up or down? So the radar trend, is it up or down from what you're looking at here? In fact, I'm going to go one step further here. Let's go to the format to symbol. And let's, sometimes it's good to do this. Let's take out the prices, and let's take about format the analysis technique. We'll go to radar, and we're going to put on 10 radars here. So one of the things you want to look at when you're looking at trend of radar is where, in relation to the last few, are your highest points of volume being concentrated. So we go back here. You can see it's kind of down, sitting. Now there's some up here, don't get me wrong, you know, on the top side, but really the longest yellows in all of this are here, then down, down, down. So yeah, it is down. clearly is a push down into the a downtrend of the radar. And really, when you look at this, when you look at the weekly, it gives you the overriding where things have been. You can just see that very simply from this, and that's an important thing because that's the overriding trend for IBM since actually 2012. Now, you had to probably play a lot of movement inside of the level of a move up into the 200s and all that, but the overriding trend really, if you look at where we've been, is kind of lower. Now, if in fact IBM, back to this again, you have a normal distribution happening here, but I want to show you something. Let's put that back to price here. That's not what I want to do. Let's put back normal, and let's put back the format the symbol. Let's put the pricing back overlaying this. I want to show you something. Notice that if we were to draw a box here, and I use the box tool a lot when it comes to the radar, etc., that I can see that really, if I was to kind of take this level here, I would say that, okay, let me look inside there what's going on and maybe even go further left, okay, that if IBM does in fact break down from where it is right about now a little bit lower, the next target you have, and this is all the if-thens, next target on the downside is probably at this big peak here at about 179. Now, if it breaks there, if you look at that whole box and look at what's included in that box. That's the big issue here. What's included inside of that box in terms of, is there a lot of radar inside of there? When you see this just black when you look left, the bottom line is that tells you that there's no volume in price and the potential for a trend move lower very quickly, because of course when you have a trend, price moves very quickly through time, moves horizontally, very much, or vertically I should say, through time quickly. You get those big drops. And when you have a situation where there is an overall consolidation, it moves horizontally and vertically very slowly. But we're looking for those breakout opportunities. That's where you make the money. Looking for those breakout opportunities. Now, IBM's a beloved stock, and it's one of those stocks that people just want to buy and have, etc. But the bottom line to all this is that when you look at the overall trend and then you find out where the distribution is, use your box tool in TradeStation to actually draw areas around to find out what is left, what is moving left on this, and you'll be able to find out a lot more about things. So basically, we're going to play this replay. We're going to have it. That was an in-depth look at radar, some of the components of it, how to look at it, how to use it. You could overlay, for example, just very simply put on your altimeter with that, and that will give you a lot more of the algorithm. You can see that the support that we had is right on the right support. This blue line right there is very supportive right there, and you can see that the target and the boxes move very well. So again, use the box tool and put a clear background so you can see what's going on, and that you use as your overall range. By the way, just one thing, if we move this box up, look at how much of the radar is included in there. A much different look than when you just have a black background or a white background, depending what you're doing. Anyway, you get a 10-day free trial. If you haven't had it, you can always contact us. Go over to TriggerCharts.com. Of course, if you want to grab it, I put in the chat over at the Strategy Network, and all the different indicators that we have available there as well. Everything is available for a free trial, so you can check that out. What you're looking at is the Commander series in total on the screen right now with the multiple time frame. Anyway, we're going to end it here, and we'll put this up for replay very shortly. Thanks for joining.